Hi, this is Rob Warlow from Business Loan Services and welcome to my Friday Business Finance Bulletin, my weekly roundup of news, tips, ideas and strategies on raising finance and dealing with banks. So a lot in the news this week about the amount of money being lent out by banks and other financial institutions. So let's start with the report from the Bank of England on the Funding for Lending scheme. Now, the Funding for Lending scheme was rolled out by the government as a way to encourage, first of all, banks to actually lend and to encourage business owners to approach banks to borrow. And the way they do this, well, the government has made available a constant flow of cheaper money. And subject to certain criteria, banks can access that cheap money and then pass on that savings to business owners. But the first quarter figures for 2014 don't make good reading because it showed that the net amount of money sitting in that pool actually shrank by 2.7 billion in the first quarter. Not so good. However, not as bad for small business owners because when you strip them out, they actually shrank by just 700 million. Well, I say just 700 million, but still a shrinkage. But what about the wider market? Well, the British Bankers Association has come out with the quarterly figures for the first quarter of 2014 of the amount of money lent out by banks. And it showed that in that first quarter, banks lent out about £6.8 billion. And that's an increase of 10% on the first quarter in 2013. So, clearly a positive growth sign there. But what's really interesting, though, is that they also revealed the amount of money that business owners have sitting on the current accounts and deposit accounts. And that actually showed an increase of 9%. So those balances sitting on those accounts doing nothing grew by 9% when compared to the first quarter of 2013. And in fact, it's got to the point now where the amount of money held on these accounts actually exceeds the total amount of money being borrowed by businesses. And that excess figure is about £38 billion. So nearly £40 billion more sitting on bank accounts doing nothing. So the clear message there for banks is to get out and lend more money to support growth, but also for business owners, you need to have the confidence to get out there and borrow as well. So what about sources of finance? Where are business owners turning to? Well, news from Close Bros Finance showed that there's a good mix now of what business owners are doing. And Close Brothers reckon that of the money's being borrowed, about 40% of it is coming from overdrafts and loans. So despite all the backlash against banks, still nearly 40% of funding requirement is coming from traditional sources of finance. Close Brothers also reckon about 27% then of money is coming from asset finance and invoice finance, and 21% is coming from the peer-to-peer market. Now that is a really high figure, and it's the highest one I've seen before. And then the remaining 12% is just being sourced by other. So that was personal savings, family and friends, that sort of thing. So still a good diverse set of funding, but still big preference for the banks. So if you're looking to go to the banks, where do you go? Well, this is one big area that the government has naturally been concerned about. So this week, the government had tied up with the Federation for Small Businesses and the British Chamber of Commerce to launch a new website called businessbankinginsight.co.uk. And this is the result of regular surveys now that they'll be doing every 6 months, looking at this question. If I'm looking to borrow money, which is the best bank? So they've surveyed all of these businesses. If you go to that site, it's quite easy to navigate and there's a lot of filters in there to get down to exactly what your circumstances are. So for example, you can choose if you're a sole trader, whether you're a business employing between 1 and 9 people or employing 10 to 249 people. Once you've filtered yourself out there, you can then categorize yourself further down to your locality, how long you've been in business, and your turnover. And you can also filter down to that I want to know who's the best provider of commercial mortgages for my type of business in my area. A whole host of results there. I've had a little play around the site and some fascinating comments being typed in there by business owners. And the idea is now that this survey will be carried out every 6 months, and the next review is coming out in the autumn when 10,000 business owners will be interviewed. So check that site out if you're looking to find out who is the best bank for you. So what about crowdfunding? Well, more news from another independent body doing research on the market, Liberium. They reckon that as regards in about the middle of May, for the first time, about £1.5 billion has been breached as the amount of money that's been raised through crowdfunding. So that's a 1.5 billion in total. Now they reckon at the end of December 2013, that figure stood at just over £1 billion. So there's been a 50% increase in the last 5 months of the total amount of money being raised through crowdfunding. And Liberium reckon that the sector will see a growth of about 175% by the end of this year. And that's a huge figure, admittedly coming off a very small base though. And that also links in with another bit of research carried out by Knowledge Peers, and they reckon that the sector will grow by about 135% this year. So a big gap, but still, very large growth. So if you're looking at an alternative to bank lending, don't forget, check out all those crowdfunding and peer-to-peer sites. So what's my tip for you this week? Well, the tip is taken from a clip from a seminar that I did early in the year for ACCA, that's Association of Chartered Certified Accountants. And in this brief clip, I'm just going to looking at what do you do if the bank has said no? And one of the reasons would be perhaps they don't understand your project. So what do you do? Let's go to that clip now. Sometimes the bank just doesn't get it. Can be as simple as they just don't, there's a stumbling block. The way it's been presented in the very beginning means there's a mental block. Bank files have a long history. I've sat at the other side of the desk many years ago as a person who would review and sanction and sometimes decline. And it takes a very brave banker to overturn somebody who said no 12 months ago. If somebody in that bank said no 12 months ago, and you're the one who says yes today, and it then goes wrong in 12 months' time, you're going to look like Charlie. And so files have long memories. And sometimes it is better to have a clean break and go and find somewhere else. And invariably that does work, because other banks see something that the other bank can't see through, because the institutional memory is there of what happened in the past. It's a major faff changing banks, but sometimes it's just best to cut it off. So there we are. So if your banker said no, you'll pack up your bags and move on and look around. And don't forget perhaps to check out that website to see which perhaps may be the best bank for you in your personal circumstances. So that's it for this week. Thanks very much again for joining me. I hope you enjoyed it. As ever, please like it, share this video on social media with your friends, and spread the message out that access to finance can be made easier if you follow certain tips and ideas that we share here. So have a great and profitable week, and I look forward to being with you again next Friday. Thanks very much.